Alright, students, good afternoon. We are going to discuss about statement of cash flows. Okay. First of all, I want to know, did you have the class for statement of cash flows in your accounting principles? You did? And you don't remember?
Yeah.
Yeah, I believe your teacher, should already, talk about statement of cash flow. But today we are going to go a bit, details for statement of cash flows. All right. So since you already have some ideas about statement of cash flows, so would you like to, have a little discussion and tell me what you know about statement of cash flows? All right. So can you do like 2 or 3 in one group, and I'll give you 3 minutes. Then you will tell me what you know about the statement of cash flows. Is it okay? All right. Wait, can you go with Albert?
Right.
Brian, yes. Okay. And you two, 3. 3 minutes. Okay. Okay, so I'm going to point some of you to talk about it, okay? Haley, do you like to tell? What do you have? And this is 1 or 2 things about statement of cash flows. Any? Probably
Alvin?
Jordan.
Alvin.
Alvin, you want to talk about it?
No.
Come on. Jordan, I believe Jordan will. Okay, Jordan. So what do you know?
The statement that's showing how does it change in the balance sheet account.
The statement tells how the changes in balance sheet account.
That's balance sheet.
Uh-huh.
And it proposed to what?
Okay. So it's not quite clear to you, right?
Yes.
How about the others? Anyone want? 4 major financial statements. Okay. So the other 3 we already introduced. One is statement of comprehensive income, right? We have talked about that. And the one is statement of changes in equity. And another one, come here. Another one is statement of financial position. Okay, so in the previous classes we already discussed the 3 financial statements. Okay, so this one is the 4th one, statement of cash flow. It is also required by IASB. So IASB is the International Accounting Standards Board. It's the authority of IFRS, right? Okay, so the financial statements can provide financial information that can help financial users in making decisions, right? So the important element of objective of financial reporting is assessing the amounts, timing, and uncertainty of cash flows. So all these 4 financial statements can assist the report, the objective of the financial reports. Okay, especially this statement of cash flows can provide the cash information about the amounts, timing, okay, directly to the financial information users. All right, so let's see the primary purpose, okay, of the statements is to provide information about the cash receipts and cash payments of the enterprise So from the title of the statement, the title of the statement is Statement of Cash Flows. Therefore, it provides information about cash inflows and cash outflows. Okay. It also provides information about the changes in cash balance. So you will see. Okay. So in this statement, it tells you give you the answers to the questions. The first one is, where did the cash come from? Okay, come from. So the cash resources of a company mainly comes from, what would you say? Cash mainly
Investors.
comes from the company.
Investors.
Pardon?
Investors.
Investors. Well, I think, yeah, this is also one of the, cash resource. I think that is correct, yes. So investors, they contribute, okay, they make investment into the company and becomes the owner, yeah. But this activity will be classified into financing activity, okay. After the contribution from the owners, healthy operation, business operation, cash flow should come from,
Sales.
sales, yeah, you are right, yeah. So sales, yes, that's correct, yeah. So where did the cash come from? You can tell, yeah, from the statement of cash flows, yeah. So the main resources, yeah, should come from sales, yeah. And it can come from contribution by owners as well, yes. And it can also tell us what was the cash used for. So what was cash used for, such as, purchases, if you are an, merchandiser, you purchase goods, products, and then you sell them, right, to get cash. But before you purchase that, you should have cash to make purchase of the goods. Yeah. And it also tells what was the change in the cash balance. Okay, the change in the cash balance, it will show at the end of the statement of cash flows. We will see it later, all right? And statement of cash flows, the preparation of financial statements, generally, based on the accrual basis. So do you know about accrual basis and cash basis? All right. So for the statement of comprehensive income, statement of changes in equity, and statement of financial position, they are prepared based on accrual basis. So accrual basis, let's look at this one. Accrual basis, revenues are recorded when products or services are delivered, and record expenses when incurred, no matter cash is received or paid. Okay, nowadays, in practice, a lot of transactions are done on credit. So in most cases, the cash is not involved right away. They are not received or paid immediately. They are on credit, right? But IFRS, okay, requires that business entity should acquire accrual basis, because accrual basis can faithfully present the actual sales and actual expenses incurred for the period, okay? If you apply cash basis, the recognition of revenues and expenses are different, okay? Revenues are recorded when cash is received, and expenses are recorded when cash is paid. So in other words, under this cash basis, business record revenues and expenses only when cash is received and paid. Okay, and the others won't be recognized. So therefore, it is not recommended by IFRS. Okay? All right, so the three statements I just mentioned, they are prepared by, based on accrual basis. However, statement of cash flows is prepared under cash basis. Because cash is important as well, for business to keep running. If cash is not sufficient, the business might be, bankrupt or being, lack of cash. Therefore, statement of cash flow is becoming important. Okay, so financial users nowadays look at statement of cash flow quite often. All right, so you need to change from the accrual basis to cash basis when preparing the statement of the statement of cash flows. Okay, so it becomes a bit complicated. All right, but we will talk about some more details in this topic. All right, so you understand now we are applying accrual basis, instead of cash basis. But now, when you are doing statement of cash flows, you will have to change it to cash basis. Only transactions involve cash receipt and payments will show in the statement of cash flows. All right. So, as the student just mentioned, in this statement of cash flows, it categorizes all the activities into three categories, okay, into these three sections. One is operating activities. So what activities would be included in this operating activities? Can anyone tell me? Okay, let me give you this. The transactions that are entered into the determination of net income. So when you see net income, what comes to your mind? The income statement. Okay, so almost every item shown in income statement is the items, okay, to determine the net income for the period, right? But this income statement is prepared under accrual basis, right? So we will have to make some adjustment to tick out transactions not involving cash, right? So for this section, okay, we will see, how we prepare that, okay? So the operating activities, and how about investing activities? Investing are the activities involving investments, right? Okay, let's see. Yeah, if a business has free cash, right? Of course, the business can make investment by making loans. What's that? Calvin, yeah. Okay, so for example, Calvin needs money, right? So I have free cash, right? So you can come to me and I will make loans to you. Okay, so that is a kind of investment. Then you will pay me interest, right? Or if I have free cash, so I can invest my money in others' shares, right? Purchase stocks from the market and to make the price difference, okay? Or I can make investment in government bonds or corporate bonds, okay? So that is another type of investment, okay? But one major investment by business entities is to purchase long-term use assets. Long-term use assets, such as what? Can you give me some example of long-term use assets? Yeah, land and buildings, yeah, they are long-term use assets. Okay, so that is investments by the business entity. Okay, because they put money to acquire or purchase those long-term assets for business operation. Okay, so these assets will make contribution or bring benefits to the business, right? So they are regarded as investments by companies. Okay, so that's another type of investments. Okay, so all these types of investments are classified into investing activities. All right. How about financing activities? Transactions involving liability and equity items. It's not so clear, right? Okay, so financing activities, for example, that my company needs more money, right, to expand my factory. Okay, so I can go to, a bank and ask for money, more money, right? So that will be a part of financing activity, right? And the company can, if I am the corporation, I probably issue more ordinary shares to raise capital. That is another way. Okay, so that is also a financing activity. Or I can issue bonds, corporate bonds, to raise money for business operation. That is another way of financing. All right. So when we prepare a statement of cash flows, we generally classify all the activities into these three sections and present it on the statement of cash flows. Right? And at the bottom, we also reconcile the cash balance, because on this financial statement, it only shows transactions involving cash receipts and cash payments. Okay. So let's look at, okay, so this is a part of the Taiwan Semiconductor, right? Taiwan Semiconductor's consolidated statement of cash flows. Okay, let me put it out. Okay. So this is the real financial statements. Okay, so you have seen TSMC's statement of financial position, right? I showed you before. And you also have seen this comprehensive income, statement of comprehensive income, and statement of changes in equity. And this is the consolidated statement of cash flows. Can you see it clearly? I probably enlarge it. Is it better?
Yes.
Yes. So see. So the first section in the statement is cash flows from operating activities. Can you see it? Okay. And then the items shows here. But see, can you see the first items here is income before income tax. So when you see the first item appears as income before income tax, this tells you the method applied here is indirect method. There are two methods for the preparation of statement of cash flows. One is the indirect method. Indirect method. And the other is direct method. Okay. Indirect method, especially in this section, cash flow from operators. The cash inflow, the net cash, I would say net cash provided by operating activities are directed, I would say indirectly, not directly. That's why we call it indirect method, because it starts with the income from income tax. Okay, this number we take it from statement of comprehensive income, or you can say from income statement, net income. Okay, before net income there is one item, is income tax, right? And before income tax, it's income before income tax. Do you remember the income statement? Okay, because the operating activities are those transactions, you know, to determine the net income. So we take it from there and we do some adjustment. These adjustments are generally not, not cash involved. So we take them out. Okay, by, subtract it or add it in. We will talk about it later. Let's take a break, right? Let's come back a minute later.